Hey everyone, welcome back to Corporate Decoder, the place where we dig into the corporate filings so you don't have to. Today we're cracking open Rocky Brands' 10K report. No, we're not talking about Sylvester Stallone. I promise this will be more interesting, or at least more financially sound. Rocky Brands, if you don't already know, is all about boots and shoes. Think work boots, cowboy boots, and that kind of thing, plus a little bit of clothing too. The big news is their sales dipped a bit, but they're managing to keep things afloat. Let's see how. So Rocky Brands splits its business into three parts: wholesale, retail, and contract manufacturing. Wholesale is where they sell to the big stores, retail is their own stores and websites, and contract manufacturing is when they make stuff for the military and other special orders. First off, let's talk about how they get their products to you. They sell in over 10,000 stores in the US and Canada. That's a lot of boots on shelves. They also landed a multi-year deal with the US military, which is some pretty steady business for them through 2026. Their big brands include names like Muck, Rocky Georgia Boot, Durango, and XTR Treff. Each brand focuses on a different kind of shoe for different activities, like Muck boots for messy jobs and XTR Treff for fishing. They're also focused on making new and improved products. This is important because the shoe business can change quickly depending on what people want to wear. They are trying to sell more through their own websites and through Lehigh, their work boot brand. Rocky also wants to grow their sales outside of the US. They want to get their brands in other countries through distributors, which are like middlemen who sell their products for them. Now for the money talk. The report says that the total value of their stock held by regular investors was around $266 million last summer. Now, before we dive deeper, keep in mind that this report, like all corporate filings, has some legal disclaimers. It reminds everyone that what the company expects to happen might not actually happen. One of the risks they point out is that expanding their brands into new markets might not work out so well, which could hurt sales. Also, most of their stuff is made overseas, so they're exposed to things like tariffs and changes in political situations. And here's something interesting: if the weather is too mild, people might not buy as many of their winter boots. So yeah, even the weather affects their bottom line. The shoe and clothing market is tough. They are going up against companies with way deeper pockets. To compete, they need to make good products and deliver them on time. Here's a general reminder that the stock market can be unpredictable. The company is also switching to a new computer system, which is a big deal. If it doesn't go smoothly, it could mess things up. Cybersecurity is a big deal for every company. If Rocky Brands gets hacked, it could hurt their reputation and cost them money. Rocky Brands recognizes the critical importance of cybersecurity. They are developing systems to manage those risks. And in evaluating IT and cybersecurity programs, they include external experts and consultants. Here are the key numbers from their income statement for $2023 $80, $453 and $8 million. That's a bit lower than last year. Gross margin, which is how much money they make after subtracting the cost of making the products, was 39.4%. Operating expenses, which are the costs of running the business, were $147 on $1 million. Interest expense, $16.1 million. That's what they pay on their loans. Net income, which is their profit after everything, was $11.4 million. Retail net sales increased due to growth in their Lehigh custom fit platform and their direct-to-consumer e-commerce business. Inventory is down a bit, and they have more money tied up in accounts payable and accrued expenses. An increase in interest rates would adversely affect our financial results. Their intangible assets are customer relationships and trademarks. Their cash flow from operations was positive, but because of investing and financing activities, their cash decreased slightly this year. They also spent some money paying dividends to their shareholders. Even though they paid dividends, they can change that policy whenever they want. The hardest part of all this is that the fair value of these things can change a lot depending on what's going on in the market. Deloitte, their auditor, said that the company's handling of goodwill and intangible assets was something they really focused on in their audit. This is because it's a tricky area with a lot of estimates involved. This part of the report goes through all the accounting rules they follow. There's a lot of technical stuff here, like how they handle foreign currency and how they value their inventory, which is all the stuff they have ready to sell. Also, there are new accounting rules coming out that they'll have to follow soon. It sounds like these changes will require them to give more details about their income taxes and expenses in the future. They sold off the service brand during the year. That sale gave them a small gain, but also means they're focusing on fewer brands now. They refinanced their debt in April, which basically means they got a new loan to pay off the old one. This cost them some money up front, but it should save them money in the long run. They also have some leases for their buildings and equipment. They owe a few $1 million each year for the next few years to rent these places. There was a new share repurchase program in February. Share repurchase programs help to keep the stock price up by reinvesting company stock into the company. Finally, there's information about the company's leaders and how they're running things, but that's for another video. Now, what's the real story here? Rocky Brands had a tough year with sales down a bit, but they're managing their money well. They are paying less in interest on their loans, and they are trying to make more money off of their products. However, they had to write down the value of their muck brand, which is never a good sign. Overall, Rocky Brands is facing some challenges, but they're also making some smart moves. They need to watch out for changing customer tastes and those tariffs on goods coming from overseas. But if they can keep making good products and selling them in the right places, they should be able to keep things moving in the right direction. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, hit that like button and let me know what company you want us to decode next. And as always, don't forget to subscribe for more deep dives into the world of corporate filings.